Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. We're just testing the audio. All right, if you have questions or topics you'd like to discuss, please chat that over now so that we can be sure to get to them all. All right, there's the audio. Looking good, sounding good, I should say. So we're excited today to discuss pick the right one. Don't confuse basic Fidelity Solo 401k with advanced Solo 401k setup. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. This is another one of our daily Solo 401k webinar and Q&A sessions with my Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. Again, today's topic is pick the right one. Don't confuse basic Fidelity Solo 401k with advanced Solo 401k setup. This is your chance to get answers. Please use the chat now to ask questions on today's topic or anything else. Please chat them over now so that we can be sure to get to them all. Let's get started. And we've got some questions already teed up. Yes, thank you so much for your patience with the audio. I'm glad we got it fixed today. Thank you so much for circling back and bringing the questions. So we'll start out with the question that was first teed up here by Patrick. I'm a sole proprietor. My wife and I have solo 401ks through my solo 401k. Thank you so much. Let's use round numbers and say that I show 90,000 on line 31 of my Schedule C. My limit for total contributions to my solo 401k is going to be 70,000, right? So for 2025, I could do 23,500 into the pre-tax, then 46,500 into the after-tax, then a quick conversion to Roth. If that is all correct, my questions are about my wife. If she had no income on her own, can I split up my previous numbers between our separate accounts? Those are wonderful questions, Patrick, and thank you so much for your good questions and, of course, for your business. So let's start out with the basics. So one's ability to make contributions will depend on different factors. One factor is the age, another factor is the self-employment income, because you can't save more than you earn. Another factor is the type of contributions that you're looking to make. So for a sole proprietor, even if the plan was set up in 2026, you could still make 2025 employee contributions. You can still make 2025 employer contributions. You can still make 2025 voluntary after-tax contributions, even though the plan was set up in 2026, because you're a sole proprietor and because of the Secure Act. Now, if the plan was set up in 2026, you would need to make those employee contributions by April 15th of 2026. If you file a timely extension for your 2025 1040, that would give you more time to make the employer and the voluntary after-tax, but not the employee, if the plan was set up in 2026. But let's assume that the plan was set up in 2025. In that case, you could still make all types of contributions, even the employee contributions, by the extended tax return deadline, including any timely filed extension in 2026. So that's a little bit around the deadlines. Now, as far as the self-employment income, for a business that is taxed as a sole proprietorship, your self-employment income is equal to your net income reported on line 31 of Schedule C, less 1/2 of the self-employment tax. Now, of that number, you can contribute 100% dollar for dollar as an employee contribution, up to 23,500 or more if you're age 50 or older. And those employee contributions may be made as pre-tax contributions and or as Roth contributions. So one of the great things about our solo 401k plan is that it allows for all types of contributions. So you can diversify. It could be some pre-tax, some Roth, some after tax, etc. So like in your example, you could do 100% dollar for dollar of the self-employment compensation up to 23,500 as a pre-tax employee contribution. Now that assumes that you didn't make any other contributions to another plan for 2025, like a day job 401k plan. Then you could just choose to skip the employer contributions, just not make any employer contributions because it's discretionary. And then just make the rest of the contributions as voluntary after-tax contributions. And the voluntary after-tax solo 401k contribution limit is 100% of the self-employment compensation. Again, line 31 of Schedule C, less 1/2 of the self-employment tax. And you can contribute the difference, 100% dollar for dollar, up to 70,000 for 2025. So your numbers are exactly correct. Now, as far as your spouse's ability to make contributions, so a solo 401k, that's a marketing term. And the technical term is a one participant plan, an owner only plan. Now, there are exceptions to that one participant requirement. One exception would be for a spouse who's also working in the business and reporting the spouse's own earned self-employment income. So in order for the spouse to be able to participate, number one, the spouse would need to be listed on the documents as a trustee. So for example, if the spouse was listed on the online application when you first signed up, then the spouse would be listed on the documents. But if not, you would need to amend the documents. The documents would need to be amended to add the spouse as another trustee of the plan. And then if the spouse is working in the business and reporting the spouse's own earned self-employment income. So practically what that means is that each spouse would need to report their own separate Schedule Cs. So you can work with your tax advisor to report some of the income on one spouse's Schedule C and the rest of the income on the other spouse's Schedule C. And then that second spouse's ability to contribute would be based on their situation, such as their age, their earned self-employment income, the types of contributions that they want to make, et cetera, et cetera. Great question. Thank you so much for bringing it, Patrick. We do appreciate it. So now let's go to the next question, which again, it looks like this was again someone that circled back from yesterday. Thank you so much for circling back. We do appreciate it. I have one of your plans and I've opened up my accounts of Fidelity and account under trust where I transfer money between the bank account for investment and Fidelity. Is that considered a rollover? Wonderful questions. Highlight some of the great features of our plan. One of the features of our plan is portability. So we are a solo 401k plan provider. We offer a solo 401k plan that comes with all the advanced features. We provide the solo 401k compliance support. But what we don't do is we don't provide accounts, we don't provide investment advice. So that means that we are totally portable. Our plan is totally portable. We're totally neutral as far as where the accounts are opened up at. Fidelity, that's the most popular brokerage option. Second is Schwab. But also we have many, many customers who open up bank accounts or an account at a credit union. We've helped customers open up accounts in hundreds of different banks and credit unions. And it's 100% acceptable to have both a bank account and a brokerage account. Why might someone want to do that? Well, they might be looking to invest in alternative investments because that's one of the features of our plan that attracts clients to us, right? They may want to invest in real estate, private placements, private stocks, etc. So practically, to facilitate those investments, even though you could technically make those types of alternative investments out of the brokerage account at Fidelity, because really that's just a brokerage account at Fidelity that's governed by our solo 401k plan documents. And what you can invest in is dictated by the documents. So technically you could transfer money out of the brokerage account to make one of those types of investments. But really, if you want to have access to certified bank checks, debit card, the ability to ACH funds in and out of the account, one would need a bank account for that. So practically, a lot of folks who do want to invest at least some of their money in alternative investments will find it advantageous to open up a bank account. And you can have both brokerage accounts and a bank account. You can transfer money between, like let's say between deals, you want to put some money into a mutual fund. You could transfer money back to the brokerage account to facilitate that mutual fund type of investment. And as long as it's the same type of account, so it's a bank account for one solo 401k participant, a brokerage account for the same solo 401k participant, and it's the same types of funds, right? Like pre-tax to pre-tax, Roth to Roth. In that case, it's not taxable, it's not reportable. You're literally just moving money between accounts for the same plan. It's not taxable, not reportable in that situation. So it's definitely not considered a rollover. Okay, wonderful questions. If this is helping you feel more confident about your future, please take 1 second to like and subscribe. Liking will tell the platform that this content is valuable, which is going to help other solopreneurs, other advisors, just like you, who might be looking to secure their retirement future, help them find this content, which might be valuable to them. So if you want to help out your fellow solopreneur, your fellow advisor, please like the video, please share. We also invite you to subscribe. As mentioned at the outset, we go live every day with content, answer questions. We bring content like we're about to dive into the content that we have for today. So to get notifications of that crucial content that we deliver every day to help you secure your retirement, please subscribe, whether you're on LinkedIn or YouTube or X or Instagram, whatever platform you're watching us on today. Okay, wonderful. So now let's go on to the slides. We already talked about the disclaimer about how it's just educational purposes. And really the content here is not to confuse basic versus advanced. Unlocking the full power of advanced solo 401k versus a basic Fidelity brokerage account. So let's start out with the basics in terms of who's even eligible to set up a solo 401k. Well, a solo 401k on the surface is just like any 401k in the sense that it's for an employer, but it's specifically for a self-employed individual. So in order to be eligible, in order to get access to these features, you need to be self-employed. And self-employed really means that you need to report earned self-employment activity on your tax return. So that's not investment income. It's got to be earned self-employment income. Now, there's different ways to be, or I should say, to report earned self-employment income. In other words, you don't necessarily have to have a legal entity. You don't have to be an S corp. It doesn't have to be a large self-employment business. It could be a micro self-employed business. Ultimately, what you need to report is, again, earned self-employment income. So that could be income reported on line 31 of Schedule C. If your business is taxed as a sole proprietor, let's say you don't have a formal legal entity, or you do have an LLC, but it's a disregarded LLC. Or let's say your business is taxed as an S corp. Could be could be a corporation taxed as an S corp, or an LLC taxed as an S corp, or it could be taxed as a C corp. In either case, whether it's an S corp or a C corp, earned self-employment income is income that's reported on a W-2 that you receive from that S corp or the C corp. Lastly, partnerships. Earned self-employment income from a business tax as a partnership is income reported on line 14 of the schedule, excuse me, of the K1 that you receive from the partnership. Now, the other piece of the eligibility equation is that it's got to be an owner-only business. In other words, that business cannot have any non-owner, non-spouse, full-time W-2 employees. So that means you could have contractors, right? If someone's working as an independent contractor, that's not a W-2 employee. You could have as many contractors as you want, and that's not going to prevent that individual or preclude that solopreneur from being able to set up a solo 401k. You could even have another owner of the business, as long as they're at least a 3% or more owner of the business, and they can even participate in the solo 401k, and it's still considered to be a quote unquote one participant plan. You could have a spouse that's working in the business, regardless of whether the spouse actually owns part of the business, and they could participate, and it's still considered to be a solo 401k. You just cannot have any non-owner, non-spouse, full-time W-2 employees, where full-time means you're either working 1,000 hours per year with a year of service or 500 hours per year for 2 consecutive years. So that's how you get into the game. Now, how do you get access to the advanced features? Well, it comes down to the documents. The way that I think about it is that a solo 401k is a legal entity. So, like any legal entity, it's the documents that dictate what you can do. Technically, a solo 401k is a trust, it's a retirement trust. Now, the statute that applies to 401k plans will enable a wide range of features. But the way that the statutes are written, it says this feature is available if it's in the documents. So it has to be both allowed under the statute and also allowed under the rules that apply to your plan, which are found in those solo 401k plan documents. So when you open up a solo 401k directly at Fidelity or another brokerage like Schwab, etc., that means you're using their documents plus they have the account. So those companies, they make a business decision to make the documents very vanilla, right? They don't want to offer a solo 401k plan that allows for, say, investing in real estate. They've made a business decision not allow for mega backdoor Roth contributions, to not allow for solo 401k loans, et cetera, et cetera. But what's great is that those companies will still open up accounts for people that, or I should say, many of those financial institutions, right? Like Fidelity, like Schwab, E-Trade, et cetera. They'll open up accounts for people that bring their own plan documents. So customers will get the plan documents from us, then they'll use those documents to open up the accounts at the bank or brokerage of choice. So now they can have all the advanced features that comes with a solo 401k that's provided by my solo 401k Financial, but still have their accounts where they want, such as Fidelity. So we offer total freedom in terms of where the accounts are opened up at. So customers can still have their accounts at Fidelity, but have the documents with all the features provided by the solo 401k plan offered by my solo 401k Financial. And it's not just Fidelity. As I mentioned, could be Schwab, could be E-Trade, et cetera. Those are just examples. Could be a bank or credit union. We've helped customers open up accounts at hundreds of different banks and credit unions. Now that you understand where the features come from, now we can understand why the Fidelity basic plan is so limited, because they've made that business decision just to not put those features into their documents. So their plan documents don't allow for alternative investments like real estate, like crypto, like private equity, private stock, pre-IPO stock, etc. Whereas our solo 401k plan, the one offered by my solo 401k Financial, does allow for alternative investments. The basic Fidelity plan doesn't allow for mega backdoor Roth contributions. We were the first provider to offer a solo 401k plan that allows for mega backdoor Roth contributions. So no one has more experience than my solo 401k Financial when it comes to making mega backdoor Roth solo 401k contributions. 401k participant loans, not supported with Fidelity's basic plan documents, definitely supported with the solo 401k plan documents provided by my solo 401k Financial. The $1,500 in tax credits. You cannot claim those tax credits by setting up a basic Fidelity plan because it doesn't include the feature and the notices that need to be in the documents in order to be eligible to claim those credits. My solo 401k Financial was the first solo 401k provider to offer a plan generally to clients that's going to make their business eligible to claim the credits. 1500 EZ preparation. So Fidelity is not going to prepare your 5500 EZ. 5500 EZ is going to be required once the value of the plan, including the value of any defined benefit plan that might be sponsored by that solopreneur, exceeds $250,000. So the 5500 EZ refers to an informational tax filing that has to be done. So Fidelity, they're not filing the 5500 EZ for their clients, whereas we do, and we don't charge any additional fee. Now, again, we don't have access to the accounts, so customers or their advisors do need to let us know once the value exceeds $250,000, so we can add you to the process where we end up filing that 5500 EZ under the electronic filing system, just to make it easier for the clients, for the advisors, et cetera. So the Secure Act tax credits, again, that's something that's going to be enabled just by setting up a plan with us. That could be both a new plan or even an existing plan that's upgraded to our plan. So let's say you do have that vanilla basic solo 401k from Fidelity. You can upgrade it to our plan, and now you'd be eligible to start claiming those credits. That's $500 per year for 3 consecutive years. Now, in order to be eligible to claim the credits, the plan needs to have the auto enrollment feature enabled, as well as other notices, etc. Part of that feature is going to establish a default 3% contribution percentage. But the solopreneur, the solo 401k participant, has the right to opt out of the default and still be able to claim the credit. Opting out of the default doesn't mean that the plan document doesn't include the auto enrollment feature. It still does. They just exercise their right to opt out of the default 3% contribution percentage. So in other words, the solopreneur can opt out of the default. Therefore, they can contribute in whichever amount or schedule they prefer, obviously subject to the limits and the deadlines, but still be eligible to claim those credits. True investment choice. Again, with our solo 401k plan documents, we, of course, offer a plan that would allow for typical brokerage type investments like stocks, bonds, mutual funds. Again, Fidelity is the most popular option in terms of where customers are opening up accounts at. And we're very hands-on in helping them open up the accounts. But in addition, our plan is going to allow for investing in real estate, cryptocurrency, private equity, just to name a few. The Mega Backdoor Roth. We were the first solo 401k provider to offer a plan that supports the Mega Backdoor Roth. For 2026, one could potentially contribute up to $83,250 where those funds end up in a Roth account. But you need to have the plan documents like ours that allows for that. Borrow from yourself. So this refers to the ability to take a 401k participant loan. That's where you literally withdraw the funds from your solo 401k. You can use those funds for any purpose whatsoever. Could be a personal purpose, could be an investment purpose. It's not going to be subject to taxes. It's not going to be subject to penalties as long as it's, number one, documented as a loan. We prepare the loan documents for no additional charge. Customers just have to request it. We have an online form, and then we prepare those loan documents within 1 business day. It also needs to be within the terms of the loan. So that loan is going to be limited to no more than 50% of the balance, not to exceed $50,000. It needs to be paid back in either monthly or quarterly payments, equal payments of principal and interest. The interest is either prime plus 1% or a CD rate plus 2%, with those payments spread over a 5-year term. So again, not something that's allowed, not something that's supported with the basic Fidelity solo 401k. So if that's something that you want, don't confuse it with obtaining an advanced solo 401k like the one offered by my solo 401k Financial. IRS 5500 EZ. That's part of the ongoing compliance support that we provide as the solo 401k plan provider. So this is essential. This is oftentimes not understood by clients. So if you have a solo 401k at Fidelity, a basic plan, it's your responsibility to file the 5500 EZ. 5500 EZ is an informational tax return that applies once the value of the plan, including the value of any defined benefit plan, exceeds $250,000. The late penalties are tremendous, $250 per day, right? So that can add up very quick. If we provide the plan, and again, you can have your accounts at Fidelity still, you just have to let us know, or your advisor lets us know, once the value exceeds $250,000, then we'll add you to our queue to take you through that 5500 EZ filing process, where we end up filing it under the electronic filing system. We don't charge any additional fee for that. Additional examples of ongoing compliance support would be, for example, the 1099-R reporting. That's something that has to be done when you make a Mega Backdoor Roth contribution. Again, we don't charge any additional fee for that. Customers, their advisors, just have to request it in a timely fashion. So to get started, it's very simple. It just takes a minute to complete our online application at mysolo401k.net. Just click on Open Account, then click on Solo 401k. We're just gathering very straightforward information, just 10 simple questions. Once the questions are submitted via the application, payment is made. We prepare the documents within the same business day. So we move very quickly. Then we proceed from there to help you open up accounts at the bank or brokerage of choice. Okay, great. Again, thank you so much for checking out those and sticking with that content. If that's helping you feel more confident about your future, please take 1 second to like and subscribe. We would greatly appreciate that, as that helps us to get the word out. Now I'm going to go back to one of the questions, or the person that was asking the question earlier with a follow-up question. Thanks so much for bringing the questions. If there are additional questions, whether on this topic or really anything else, please don't hesitate to chat it over. We got a little bit more time left, so chat it over now so that we can be sure to get to them all. I also have an older solo 401k opened at Fidelity using their template for another side hustle. I want to use your template. How do you make the change? So I'm not sure if you signed up, if you let us know about that, in which case we would have drafted the documents as a restatement. If not, email us at support@mysolo401k.net, and we can take the steps necessary to restate the plan under our plan document, and then we can help you move over the cash and assets from that pre-existing account, that pre-existing older solo 401k at Fidelity, to your new accounts for the restated plan. That's very common. We help as part of that onboarding process, right? We leverage all of our experience having helped customers transfer funds from hundreds of different places, right? We've tracked that in our knowledge base just to make it easy for new customers or existing customers to help them complete that transfer, whether we're pre-filling the transfer paperwork, et cetera, et cetera. Now, we want to take a moment also to invite you to our community. We've got the largest community of solopreneurs, solo 401k advisors, just interested parties. It's totally free to join. All are welcome. We've got over 30,000 members, which translates to a vibrant community forum, we also have lots of great content like videos, webinars, things of that nature. So there's just a ton of ways to learn, a ton of ways to share the knowledge. So please don't hesitate. All are welcome. You don't have to be a client. Really, anyone who's interested in these topics can join. So please join. You can join quickly and easily at mysolo401k.net/my community. Well, it looks like that's it for today's Solo 401k session. Thank you so much for investing your time with us. Your time is valuable, and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this Solo 401k community. We'll be back here tomorrow with more crucial content to help you secure your retirement.